If you ask almost anyone, who's trying to crack the code of the financial markets, they'll almost always point you towards something external.
Oh, absolutely. A better system, a new
Yeah.
indicator.
A sharper signal, maybe just faster tech. We spend, countless hours trying to perfect that technical side of things.
And yet, despite that global, relentless search for the perfect external system, the underlying stats, they haven't really changed much since Mark Douglas first wrote his foundational work, The Disciplined Trader.
Right.
Since the market infrastructure just exploded in the 80s with all the new exchanges and information, we have more data than ever. But, well, only a tiny minority of traders consistently makes a profit.
And that's the wild truth we're diving into today. Douglas's whole premise is that success is relentlessly, fundamentally psychological, not technical.
Hmm.
The difference between that small group who succeed and the vast majority who struggle, it all comes down to mental discipline, to emotional control, and to adaptability. So our mission in this deep dive is to uncover the unique psychological landscape of the market, identify the core mental barriers that cause ruin,
Yeah.
and then walk through the practical techniques Douglas gives us for cultivating that profitable mindset.
And we really have to start by accepting that the market is a unique psychological environment. I mean, the rules that govern success and failure here, they just fundamentally clash with how we're conditioned to succeed in the rest of life.
Okay, let's unpack that central conflict. Let's start with, I think, the most profound realization from Chapter 3. The market is always right. I mean, that is just so hard for us to accept because in school, in our jobs, we're rewarded for being smart, for our reasoning, for being correct.
Exactly. We're conditioned from childhood to link our effort and our intelligence to a superior outcome. But the market, well, doesn't care about your beautifully researched thesis or your fundamental analysis or how smart you are.
It doesn't care at all.
Not at all. The market price at any given moment is just a direct reflection of the consensus action, the collective belief of every single trader who chose to buy or sell. The moment a trade happens, that price is right. Why? Because it happened.
Okay, but wait, that can't be easy to swallow. If I spent 3 weeks on my fundamental analysis, are you saying I should just, ignore that hard work the moment the price moves against me?
Yeah.
Even if that price move seems completely irrational.
Well, what I'm saying, and what Douglas argues, is that you have to make a central and kind of painful choice. Is it more important for you to be right based on your personal judgment or to be profitable? Because if your personal belief, no matter how intellectually sound it is, clashes with the dominant market sentiment, with the collective action of everyone else, your personal belief is, in the short term, irrelevant.
So profitability means aligning with reality, not just with my own narrative.
That's the first huge psychological shift a consistently profitable trader has to make.
Yeah.
And if that isn't hard enough, let's move to the second major trap, the illusion of unlimited potential.
In almost any other context, you play poker, you bet on sports, the odds are known. The precise limits of your potential profit and loss, they're defined, right?
But the market is just different. Because future price movements are unknown, the market creates this powerful and frankly dangerous illusion that each trade holds the potential for unlimited profit.
The one big move.
The one big move that could lead to financial independence. There's no inherent limit to a stock price, for instance.
That unknown is the fantasy killer.
Yeah.
I mean, the moment you believe one single trade can fulfill all your dreams, your objectivity just vanishes. You're not analyzing anymore. You're just hoping.
And hope is maybe the most destructive emotion in trading.
Absolutely.
It absolutely distorts your perception. If you hold on to that fantasy of unlimited reward, your mental filters, they start to selectively gather only the information that confirms that hopeful belief.
So you're basically blind to anything that disagrees with you.
You're actively denying vital reversal signals or price action that shows your idea is wrong, purely because you are clinging to the possibility of that massive life-changing reward. Your mind is defending the fantasy against the reality of the chart.
Now let's connect this to the unique way the market exists in time, the danger of perpetual motion.
Yes.
Unlike a structured event, a meeting that ends, a card game that concludes, a work shift that's over, the market is always moving. It's continuously flowing with no defined beginning or end.
And this perpetual motion machine has staggering consequences for how we manage loss. I mean, think about the difference between a passive and an active loss.
Okay.
If you bet $100 in a casino, the game ends. You have to actively accept the loss by walking away. It's an emotional confrontation.
But in the trading world, there's no bell that forces that confrontation for an open position.
Exactly. The perpetual nature allows you to passively endure losses indefinitely. You rationalize, you deny, you move your stop loss.
Or just ignore the position entirely, hoping it comes back.
Right. A trader can avoid the emotional pain of realizing the loss by simply doing nothing. You can cling to a losing position in the name of patience until the financial damage is catastrophic. We're talking 50% or more of capital that could have been saved.
The market allows you to postpone that necessary active confrontation with reality.
Indefinitely.
So if the external market is this boundaryless, psychologically deceptive place, then our success has to rely on mastering our internal boundaries.
It has to.
Which brings us neatly into part 2, understanding the mental environment that Douglas describes.
Right. Our mental environment, so our beliefs, expectations, memories, our intents, it all exists as this intangible energy, and it's separate from the physical world. And crucially, this mental energy operates outside the constraint of linear time.
What do you mean by that?
The emotions from a painful loss 5 years ago can feel just as real and just as immediate as this present moment, and it can influence your decision to enter a trade right now.
Let's ground that concept of intangible energy into something a trader experiences. I mean, we're not talking about some woo-woo philosophy here.
Not at all.
We're talking about the electrical impulses that store memories, right? How do those memories become charged energy that affects our bottom line?
Think about it simply. Confidence versus fear. A positively charged memory comes from successful, well-executed trades. It's expansive. It fosters confidence, curiosity, and openness to explore new opportunities.
So learning happens naturally when you're not afraid.
Exactly. And that positive charge supports your action when you click the buy button.
And the negative charge, that's the paralysis. Or, the trigger-happy reaction.
Precisely. Negatively charged energy is generated by painful, sudden, or significant financial losses. This energy creates immediate fear, and fear drastically limits your perception. It causes you to overanalyze, to hesitate, or to chase bad entries. It restricts your behavior to the structure of those old, painful memories, and it actively hinders new, objective learning.
So you're not reacting to the current market. You're reacting to a ghost from a past mistake.
You're fighting the last war. And if that energy is our internal currency, then our beliefs must act like the filters or maybe the processors for that energy.
That's a powerful analogy.
Beliefs create a self-reinforcing framework. They literally define what information you even recognize and how you interpret it. So if you have a deep underlying belief like, I always miss the big moves, your fear of being wrong narrows your focus.
And you end up filtering the market data.
And executing trades in a way that ensures you miss the move, which just validates your original belief.
It becomes a self-fulfilling prophecy. You create the very outcome you're trying so desperately to avoid because your belief system is guiding your perception, not the objective data on the screen.
Exactly. And this leads us to the core challenge of success, which is the necessity of adaptation. The market is always changing. So your ability to adapt your internal mental map to those changing conditions is directly tied to your success and, frankly, your mental stability.
But adapting means admitting you were wrong, which takes us all the way back to that first conflict. So how do we know when we need to adapt?
Well, Douglas gives us a very clear signal. Emotional pain, disappointment, frustration, anger after a trade. This isn't punishment. It's a clear indicator that we need to learn something new or maybe reassess how useful our current beliefs are because they're clashing with the current market reality.
So if you feel that pain, it means your current mental framework is failing you.
It is. Stagnation in learning just leads to cycles of repeating the same painful pattern over and over.
So we need mental flexibility. We need to be able to stay objective and modify our perception based on new market data rather than stubbornly clinging to our past judgments or theories about what the market should be doing.
Yes, you have to detach the facts of the trade from the fear of the outcome.
That's it.
And that brings us to, I think, the most practical section of Douglas's work. If we know our beliefs are the problem, they're the restrictive filters, how do we actually change this powerful, charged mental environment?
It sounds like a bit of an internal battle.
Oh, it is. And Douglas is clear. Changing deeply embedded beliefs involves struggle. It's the process of leaving a comfort zone, one that's defined by the very beliefs that cause us so much pain.
So how do we fight it?
Our conscious mind has the power to generate thoughts and visualizations that exist outside our current restrictive belief structure. The old belief itself, you can't destroy it, it's still a memory, but its charge, its energy can be diminished.
You're turning the wood into ash. The wood still existed, but the ash holds no power over your actions now.
That's a great way to put it. And the way we diminish that energy is through the consistent application of conscious thought and specific exercises.
Okay, let's outline the first practical technique for self-discovery.
Right. Exercise 1 is about identifying those internal conflicting beliefs. You need a dedicated time, say 10 minutes, set a timer and a pad of paper. And you just write out statements beginning with, I am, without any censorship. Let everything flow, positive or negative.
Okay, so statements like, I am a skilled analyst, but also maybe, I am prone to revenge trading, or I am unlucky with my short entries.
Exactly. It's an exercise in raw self-awareness. Once the 10 minutes are up, you cross out every statement that is purely factual, leaving only those that are subjective beliefs.
And what's left?
What remains are often contradictory statements. For instance, I'm committed to financial freedom, but also, I am afraid of making too much money.
That seems counterintuitive. Why would I be afraid of success?
Because success means change, and change means vulnerability. These contradictions are so crucial because they divert massive amounts of your mental energy. They create an internal conflict that makes consistent, disciplined action almost impossible.
So if you believe you're worthy of success, but you also believe you're a victim of the market.
You'll be paralyzed.
Yeah.
Identifying these specific internal conflicts is the very first step toward aligning your energy.
Okay, that makes a lot of sense. So we identified the internal conflict. Now, how will we use that information to build the necessary discipline? That's where the second exercise comes in, right? The one focused on disliked tasks.
Yes, this exercise is designed to build mental muscle without any financial risk. The steps are simple. First, make a list of tasks you consistently avoid or just dislike. It could be washing the dishes immediately, cleaning a small part of the house, organizing your files.
And the key here is that the task has to be insignificant to your main goal, which is trading success.
Precisely. The value of the exercise isn't in the clean kitchen, it's in the successful completion of a commitment you made to yourself.
Right.
So second, choose one task and commit positively to doing it. Third, create a rigid schedule for it. Say, every day at 7 every p.m. for 5 minutes, and most importantly, track your thoughts and internal resistance during the process.
That tracking part is vital. You're
Yeah.
not just doing the chore. You're observing that internal dialogue that tries to talk you out of it. You can wait. I'm too tired. It doesn't matter anyway.
Yes. You observe the resistance, but you maintain the commitment. Successful completion, repeated over time, diminishes the power of those inner conflicting beliefs. It starts to align your self-definition, those I am statements, with your goals. You begin to actually believe, I am a person who follows through on my commitments no matter how I feel.
And that consistency then just transfers naturally into your trading behavior.
It does.
Ultimately, this is all about consciously managing and redirecting that mental energy we talked about. You're directing your focused, conscious thoughts to either heal those emotional wounds from past losses or to change those restrictive beliefs, moving from fear-driven behavior to conviction-driven behavior.
And creativity is essential here, specifically for visualizing a fulfilling future. You have to be able to see yourself successfully implementing your strategy without the emotional sting of previous failures. That positive visualization helps create a new, powerful, positively charged memory that can transcend and diminish the negative energy of the past.
And finally, we have to redefine the whole concept of a mistake. If we're constantly paralyzed by the fear of being wrong, we can't ever act freely.
Mistakes should never be seen as failures. They're just essential steps in the learning journey. They're information. They point the way to something we haven't learned yet.
So wisdom is.
Douglas teaches that true wisdom is the byproduct of retaining distinctions about the market environment, the facts of what happened, but without the negative emotional energy or fear that was previously associated with them. You see the setup, you take the risk, and you accept the outcome as pure data.
So let's synthesize this whole deep dive for the trader listening right now. We started by saying that trading success is purely psychological, not technical. So what's the ultimate metric for internal mastery?
The central theme is this: the intensity of your emotional discomfort and pain as a trader, your anger, your frustration, your fear, is the clearest possible indication of how much you need to change internally to trade without fear and achieve consistent success.
So that pain is the roadmap.
It's the roadmap. You have to address that internal conflict first. True market success relies on your self-trust and your self-valuation, believing you are disciplined enough and, frankly, deserving of the financial success you're working for.
That is a powerful conclusion. The market is constantly presenting new opportunities. The ultimate discipline isn't about avoiding losses or chasing some specific profit number.
Not at all.
It's about shifting your focus entirely, from seeking market validation for your analysis to prioritizing your own personal growth, making every single trade win or loss a valuable lesson.
That's everything.
So for you, the learner, the question is, given what you now know about your internal conflicts, what part of your mental framework are you willing to challenge today to expand your world?